The housing market has been on a wild ride, with skyrocketing prices, bidding wars, and record low inventory. But as we step into 2025, many experts are asking, is this a sustainable boom, or are we on the brink of a major crash? Rising interest rates, economic uncertainty, and shifting demand could all play a role in what happens next. Is the market heading for a correction, or is there still room for growth? In this video, we'll break down the key factors shaping the housing market in 2025 and whether a bubble burst is on the horizon. Stay tuned. Today, we will talk about, is the housing market in 2025 a bubble waiting to burst? So before we get started, make sure to hit that like button, also subscribe to my channel. The housing market has been on a roller coaster ride over the past few years. Home prices skyrocketed during the pandemic, interest rates surged, and affordability became a major issue. Now, in 2025, many people are wondering, is the housing market in a bubble, and is it about to burst? Are we on the verge of a crash like 2008, or will prices continue to rise? If you're thinking about buying, selling, or investing in real estate, you need to know what's coming next. In this video, we'll break down the warning signs of a housing bubble, expert predictions for 2025, and what this means for you. Stay until the end to find out if now is the right time to buy or if a major market crash is on the horizon. And before we get started, don't forget to like this video and subscribe for more updates on the economy and real estate trends. The housing market in 2025, a bubble ready to pop. Right now, the housing market is hotter than ever. But is it sustainable? In 2020 and 2021, low interest rates fueled a buying frenzy, sending prices to record highs. Then, in 2022 and 2023, inflation and rising interest rates cooled things down. But here we are in 2025, and prices are still high, mortgage rates are fluctuating, and inventory remains tight. So is this a bubble, or is this the new normal? To answer that, let's look at key factors shaping the market: interest rates, home affordability, inventory levels, investor activity, and the overall economy. 10. Interest rates, the biggest factor in 2025. Interest rates are one of the biggest drivers of home prices. In 2020, rates hit historic lows, allowing buyers to borrow money cheaply and bid up prices. Then, as the Federal Reserve fought inflation, rates jumped past 7% in 2023, making homeownership far more expensive. Now, in 2025, interest rates are fluctuating. The Fed is trying to balance inflation control with economic growth. Lower rates could fuel another price surge, while higher rates could finally cool demand. If rates stay high, home affordability will suffer, and we might see a drop in demand, which could trigger a market correction. But if rates come down, expect buyers to rush back in, pushing prices even higher. What do you think? Will the Fed lower rates, or will they stay high? Let us know in the comments. 9. Home affordability is at a breaking point. Affordability is one of the biggest warning signs of a housing bubble. Right now, home prices are outpacing wages, making it harder for middle-class buyers to afford a home. The median home price in the US is now 6 to 7 times the median income, far above the historical average of 4 times income. This is a major red flag because it suggests that homes are overvalued. If prices remain high and incomes don't rise fast enough, demand could collapse, causing prices to drop. But if wages catch up, we might see a soft landing instead of a crash. Could the housing market be too expensive for a crash? Some experts believe that because most homeowners locked in low mortgage rates, they won't be forced to sell, keeping prices from dropping too much. What do you think? Is the housing market overpriced, or will wages catch up? 8. Housing inventory, a major supply issue. One reason home prices haven't crashed yet is low inventory. After the 2008 crash, home builders slowed down construction, and we never fully caught up. Now, in 2025, we're still millions of homes short of demand. Even with higher mortgage rates, buyers are struggling to find affordable homes because there just aren't enough available properties. If new construction picks up and inventory rises, we might see a market correction. But if supply stays tight, home prices could remain high despite affordability issues. Do you think home builders can catch up, or will inventory stay low for years to come? 7. Investors and Wall Street, driving prices up. Another factor keeping home prices high is institutional investors. Companies like BlackRock and Zillow have bought thousands of homes, driving up competition and making it harder for regular buyers. By 2025, investors own a significant portion of single-family homes, turning them into rental properties. This has made it more difficult for first-time buyers to enter the market. If investors start selling off properties, we could see a major correction. But if they continue buying, home prices might stay high for years. Should big investors be allowed to buy up so many homes? Let us know your thoughts. 6. The 2008 crash versus 2025. Are we making the same mistakes? Many people are comparing today's market to the 2008 housing bubble. But are they really the same? In 2008, home prices were driven by risky lending, subprime mortgages, and excessive speculation. When interest rates rose, homeowners couldn't afford their payments and the market collapsed. In 2025, lending standards are much stricter and most homeowners have fixed-rate mortgages. This means fewer foreclosures and less risk of a total collapse. However, home values are still overinflated, and if affordability gets worse, we could see a gradual correction, not an overnight crash. 5. Regional market differences. Not every city is the same. One thing to remember is that real estate is local. Some cities might experience price drops, while others continue to boom. In places like California and New York, prices are so high that affordability is at a crisis level. Meanwhile, Texas, Florida, and the Midwest still see strong demand. If you're thinking of buying, make sure to research local trends, not just national averages. 4. The role of government policies. Government policies can have a huge impact on housing. If policymakers introduce tax incentives, first-time homebuyer programs, or rent control laws, the market could shift dramatically. Will the government step in to prevent a crash, or will they let the market correct naturally? 3. Home prices versus rental prices. Rents have also been rising, but in some places, they've started to stabilize. If rental prices stay high, buying might remain attractive. But if rent drops, fewer people will be rushing to buy homes, cooling demand. 2. Predictions for the next 5 years. Experts are divided on whether we'll see a housing crash, a slow correction, or continued price growth. Some predict a 10 to 20% drop in home values, while others think prices will level off instead of crashing. The biggest factors to watch are interest rates, job growth, and government policies. If rates stay high and the economy weakens, we might see a downturn. But if rates drop and the economy stays strong, demand could remain high. 1. Should you buy a house in 2025? The big question, should you buy now or wait? If you find a home you can afford and plan to stay for the long term, buying might still make sense. But if you're hoping for a price crash, you might be waiting a long time. No one can predict the future with 100% certainty, but being informed is your best strategy. What do you think of our video? Let me know in the comment section below. Before you go, please hit the like button and subscribe to my channel. Thanks for watching.